Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. Today's date is February 8th, 2023. This is the Morning Forex Technical Report, where I take a look at some of the technicals that are driving the markets. What are risks? What are the biases? What are targets? So on and so forth. Let's get started. We'll start by taking a look at the euro versus US dollar and what we saw in trading over the last 4 trading days was moves to the downside. Big move on last Thursday, took the price back down toward the 100 and 200 hour moving averages. Recall that day, the ECB hiked rates by 50 basis points. The ECB's Lagarde tried to paint a hawkish picture, but the market wasn't buying, and the market moved down to the 100 and 200 hour moving average after a little brief rally. The market sold off again on Friday as a result of the U.S. jobs report. The focus turned to the U.S. dollar, and that continued on trading on Monday. And on Tuesday, we did move further to the downside, breaking below the 61.8% retracement of the move up from the January low to the January high. That break below the 61.8% retracement, however, could not be sustained, and we started a rotation back to the upside. That was all came during the Powell Q&A with the Washington Economic Club yesterday, where he gave a little bit for everybody, I think is the way you can characterize it. We did see the market move back up to what has been some swing areas that the market's been mired in for an extended period of times, and then broke out. So I'm going to outline those levels through here, just these boxes, and you can see how the market on the way to the downside actually broke below this lower end, and then broke below this lower end, and then broke below this lower end through here. And as you can see in trading yesterday, we moved back into this lower red box, but below this medium red box, or this middle red box right through here, or stayed within that area through here. So this is that swing area that encompassed both the highs and the lows of these two red boxes through here, where the market consolidated once again. And we are seeing that continuation of finding resistance against this swing area, and also the 50% retracement of the move up from the January low to the January high. So this area right here is going to be our key resistance in trading here today, our bias defining level. As long as you can stay below this area, the bias remains a little bit more to the downside here for the euro versus US dollar. Now on the downside in trading here today, you can see the market's been very narrow as far as their trading range, and on the downside we have the lower end of this red box right through here that comes in between 107.11 and 107.24. If we're able to break back below that level, and then the 61.8% retracement opens the door for further downside momentum. So right now we are seeing a little bit more of a ceiling there for the euro versus US dollar, but we do have support holding as well in a very narrow trading range today. Market traders are looking for the next shove. I don't know if we have the catalyst for it, but we do have Fed's Williams speaking at 9:20 a.m. We have Fed's Cook speaking at 9:30, and Fed's Bostic and Barr both expected to speak at 10 a.m. So we do have some Fed speak on the calendar, which could get things going. We will see. Let's take a look at the dollar versus yen next, and if we look at that pair on the hourly chart, what we saw in trading over the last yesterday was a sharp move to the downside, actually. That moved to the downside, then saw some rotation back to the upside during the chair's speech, and that move to the upside moved into this swing area here. Just follow this yellow area, and you can see going back in time, all through here, right through here, where the market found support or resistance in that area. It all started way back here, where the market based and then moved higher, and then moved below the levels, and then moved above it, and then held the support, and then broke below it. And we've been below it through this whole period here until last week, or this week, I guess, where the market moved above that level, but has since moved back below, and we've reestablished this area as resistance. So the 131.29, 131.56, it's wide, but you get the idea of the importance of that level. On the top side, we need to stay, if we stay below that level, that keeps the sellers in play after the sharp move to the upside over here. We'll see if that area can hold resistance. We are trading at 131.20 as we speak. Now, on the downside, we came down and tested the 50% of this move to the upside and held support. That was good. We also held the 100-hour moving average. It's a blue line in this chart right through here. And so that was a good hold yesterday. In trading here today, we did dip below the rising 100-hour moving average, but held above the 50% retracement. So a little bit of both there. A little bearish below the 100, but a little bullish above the 50% retracement. We'll be watching both these levels and trading here today. If the price moves below the 100, we'll be looking for a break below the 50% retracement. If we can't do that, then rotate back to the upside. That's the downside levels. We also have the 200-hour moving average, of course, in play, 130.32. So need to get back below the 100, 50%, and 200-hour moving average to increase the bearish bias for the dollar versus yen. Absent that, and this is a corrective move in this last bullish move here. Having said that, this area is key to get to and through. We saw the reasons why going back in time on the hourly chart. Let's take a look at the sterling versus US dollar next, and what this currency pair has done in the corrective move to the upside. Has moved back up to test the 100-hour moving average, and that's going to be our key bias barometer for trading here today. If the price can stay below that level, the bears remain in control. We're also below the 38.2% retracement of this last leg to the downside. If the price can't get above the 38.2% retracement, is it really switching the bias? Not really. So these two levels, both the 138.2% retracement, we will be watched for ceiling or potential sellers. If the price can stay below those levels, the bears remain more in control with a rotation back down toward this swing area down through here. Follow this yellow area through here, and you can see the number of different times the market use that area as a support level floor, and then a ceiling, and then a floor again, and then we broke above it and it didn't return to it until this week, where the market fell below that level and tested, by the way, the 200-day moving average in trading yesterday. I'll draw a crooked line here, but this green line represents the overlay of the 200-day moving average on the hourly chart, and you can see how the support buyers came in just ahead of that 200-day moving average to force the market to the upside and reestablish support right here. So 38.2, 100-hour moving average on the top side, and down here we have this area around the 120 level, nice round number as well, that the market needs to get to and through if the sellers are to take more control. Right now the sellers are in control below the 100-hour moving average, so we'll see how that plays out, but watch that level for resistance and bias switching potential for that currency pair. Finally, I'll take a look at the dollar versus Canada really briefly here on the hourly chart. I do so because if we look at this chart, we're seeing lots of ups and downs. But what we saw at the low here today is the price bounce nicely off of the 200-hour moving average in this swing area down through here, a number of different swing lows and highs through here. So off the 200-hour moving average, above the 100-hour moving average, buyers are making a play after the corrective move to the downside has seen the moves to the downside erased in trading here today. Watch the 38.2% retracement. That's of the move from the January high to the low that we saw in early February. So the 2023 range comes in at 134.23. Need to get above that level in order to increase the bullish bias, and then above this swing area near 134.34, 134.45, and then the 50% retracement level. That level has been a nice ceiling through here where the price has been finding sellers not once, not twice, but 3 times. So that would be a key target on the top side if the going down the road for the dollar versus Canada. So there you have it. A look at some of the major currencies. Hope you got something out of it. My name is Greg Michalowski from Forex Live. Good fortune with your trading. Bye-bye now.